Nobody likes to pay for economics, at least in India, because knowledge is free. Economics, if I read 5 newspapers, everyone claims to be an economist. I think it's a duty of an economist to handhold the client in taking them through not just what the conclusions are, but the assumptions that have gone into those conclusions. Because that's where the economic literacy all comes about. India has a potential in growing various sectors with leadership in some corporates and others following suit. So India has this opportunity, and India should just go and grab it with both hands.
Dr. Shubhada Rao is the founder of QuantEco Research and brings with her over 32 years of experience. A gold medalist and a Ph.D. in economics from the University of Mumbai, she has worked as a chief economist with marquee financial sector entities like Times Bank, CRISIL, and Kotak Institutional Equities. Let's listen in to the insightful conversation with Dr. Shubhada Rao. Welcome to Uwacha. This is about unboxing patterns and unleashing perspectives. And we have our next guest, Dr. Shubhada Rao. Welcome to Uwacha, and we're happy to have you on board.
Thank you, Saveen. I'm very happy to join you today in this podcast because this looks something very exciting and to look forward to, and hopefully to be able to reach out to your audience in unboxing what economics is all about.
That's going to be really exciting because generally when we hear economics, it sounds very difficult to decipher. So we hope to really break it down today with your expertise. So I'll let Shubhanga introduce you because you've known him for quite a bit.
Yeah.
So
thank you so much, first of all, Shubhada. So I have known ma'am since 2013, 14. I think was my first interaction at Yes Bank. And learned a lot through the journey at Yes Bank for sure. And so when we were thinking of doing podcasts, and money was really the topic that we thought season 1 should revolve around. And obviously we keep speaking to, because of our line of professional work, we speak to founders, entrepreneurs, investors, and what we don't do is actually speak to an economist. And I thought I should reach out to you and take your time. So thank you so much for agreeing to do this. We first want to know who you are as an individual.
Okay.
Not Shubhada Rao the economist, but Shubhada Rao the individual. And then we'll see where it goes from there.
Thank you, Shubhanga. I think it's such a pleasure to reconnect with you after knowing you for so many years, but not having been in touch over the last few years.
I think 2018.
Maybe last 5 years or 6 years. But such a pleasure to be here talking to you. I'll try and keep myself in a very defined role of being a typical economist and talk to you as a person, not in the jargon that you may have perhaps heard me use every other day, every other minute. Shubhada Rao as a person, I would say, let me start as a teenager because that's when I chose to follow this passion of mine, which is economics. Right in the class 9 or 10, when we were given an option of choosing a special subject outside the usual typical combinations of subjects that we are offered, economics was the first obvious choice that came to my mind, mainly because I thought that it was more relatable. And I'll quickly tell you how it was relatable, because when you just go to a shop in a bazaar, you want to buy a product and you feel that, oh, this product costed me so much less, a couple of months ago. Why has the price gone up? So being a chatty person that I always was, right since childhood, I made it a point to ask the shopkeeper, why has the price gone up? He would tell me, supply is short. And
where was this in Mumbai?
This was outskirts of Mumbai, where I grew up, in a Birla colony of Century Rayon. It was a colony atmosphere where we had, the emphasis was all on overall development, not just academics. You were nudged to do music, sports, everything. that you could possibly take up as a hobby or as a profession going forward. But coming back, so this in the colony, when you went to the bazaar and you asked the shopkeeper, why has the price gone up? He would say supply is less, or the cost of producing this has gone up. That sort of ticked off my idea that, I need to understand a bit more on this. And when the teachers offered me the broad syllabus of economics, I thought this is it. It was more relatable. It was more dynamic. Never
You didn't consider engineering at all at any point?
I wasn't, because I was always inclined towards arts and a scientific art, which I would like to call as economics.
Okay,
Scientific
interesting.
art. Okay.
Because there is a rationale, there is a
Behind
logic,
everything,
and arts and fine arts, because I always like to pursue, alongside economics, music. So there was a choice for me to pursue one line of profession. I allowed myself to choose economics and let go of music.
Amazing.
In the formative years. And that's how started being a classroom economist, followed by an academician when I chose to do my Ph.D. After my post-graduation. And
all of this was in India?
All of this was in India, made in India product, out
Amazing.
and out. And the idea was to do your PhD, to hone your research skills. And initially, I did think that I would do well in teaching profession as an academician. But somewhere down the line, while I was doing my PhD and teaching the students, teaching is very important, by the way, because while you've understood economics as a student, and when you are on the other side of the desk and the students ask you some questions which you think you've understood so well while studying, but students have this habit of putting googlies, and then you're made to think even more. And that's what excited me, that yes, now I need to cement all my rationale and logic of what I was taught in the class to become a more well-articulating kind of a professional economist.
By the way, even I learned finance only when I started teaching.
Absolutely.
I taught in the same college that I graduated from. For 3 years, I was moonlighting from Yes Bank, by the way.
That's interesting.
And I've actually taught the son of our HR head, if you remember, DK.
Oh, yes.
He was my student.
Oh, he was your student. Fantastic. So I think teaching just enriches your
Or rather, he was in the
knowledge.
same batch. I don't necessarily
Okay.
think he was part of my class, but I remember he was part of the same batch.
Yes.
Uh,
So one feels very happy that teaching enhances your own knowledge.
Absolutely.
And that's what happened to me. So I did pursue being a teacher for some time, but then, I'm a Gemini and mercurial by nature.
Okay.
And I like to try out different things. And I did realize that there was some degree of saturation coming into my, pursuing the teaching as a hobby. So I moved on to practicing economics, and that's how the decision of being a corporate economist came by. And after my PhD, I joined ICICI, which was the developing institution then, not a commercial bank. This was in mid-90s.
So it was, in a sense, not a bank yet, or was it already?
Not yet a bank.
Not a bank yet.
It was the Development
DFI.
Financial DFI,
Corporation,
yeah.
if I can call it. You asked me not to use jargon,
But I
so
can
I was
use
trying
it.
to expanding it, to simplify things and not get.
No, fair. I think you're on the right.
So DFI, if you're comfortable with that. So ICICI was the biggest and steepest learning curve because they throw you in the deep water right at the beginning, and you have no other choice but to do quick self-learning, modules as you call them, and that was the best stint that I did as a corporate economist, to be on the sharpest and steepest, as I said, learning curve. Then I did I can say my trot in the financial sector world over the next 25 years. Altogether, about 35 years of corporate experience, where I was exposed to a DFI, a rating agency, a startup new bank. And as life would have it, I ended my career with another startup bank, which, of course, 15 years later was one of the well-run banks up to a point. So that's what my corporate career was. Interestingly, that was also the time, as I said, of course, 25 years was a long disposition of patience that I had, beyond which, once again, my mercurial nature took over. And I wanted to continue with economics and do something very dramatically different. What was that? From being on one side of the fence, jump over and go to the other side of the fence and be an entrepreneur. Now, this is something that a lot of people thought that I was crazy to take up and try my hand at being an entrepreneur, particularly in a subject where people are so used to free knowledge. Nobody likes to pay for economics, at least in India. Because knowledge is free. Economics, if I read 5 newspapers of business newspapers, everyone claims to be an economist. Plus, being an institutional economist, you know that you just have to go to all the clients, right from your medium, small enterprises to the largest conglomerate. If I may be allowed to use the word gyan, give your gyan, which is like knowledge, proliferation of what the world is and what the Indian economy is all about, and how inflation, prices are going to rise or they're going to decline, how interest rates are going to be moving. If Reserve Bank of India decides to see inflation as a threat, will Reserve Bank of India raise the rates, and how long it will raise the rates? How is going to be the US dollar rupee exchange rate going to be governed? So all these things we used to go and tell the clients who were captive clients, and it was a free knowledge. So nobody then asked us of any further questions. They were happy getting the free knowledge. I thought that was a starting point for me, that, clients listen to me, for 1 hour or 2 hours. This is my business. In the course of my corporate interactions, particularly in the small and medium enterprises, I always felt that there was such a huge knowledge gap. And what do I mean by knowledge gap? It was economics illiteracy, if I may be allowed to, call it that. Nobody had a clue as to what governs the exchange rate, what governs the interest rate.
Why should, sorry, I didn't fully understand.
Yeah.
I want to kind of break this a little more. So you said you started and you became an entrepreneur.
Yeah.
I haven't actually heard of any other economics startup.
So if I may say so, Shubhanga, here we are trying to make a small effort of being a nascent disruptor in this segment.
Yeah. So tell me about that, right? So, I understand an institutional economist role.
Yes.
What is it that you saw that
you feel
triggered you to
become an entrepreneur
in this space?
Absolutely. So I thought 2 things. One was we felt that, an independent research view is very critical to have.
So does that mean
I say that? Why?
It's not easily available, an independent research?
Independent research, because, we've all worked in institutions. And on a realistic note, some of the views and calls do get sponsored. In the sense, if I'm going to make a very pessimistic remark about inflation, India's inflation is going to touch 12%. Somewhere there would be some pullback for me that don't say 12%. We don't want to spell all the bad news in one go.
Got it.
Make it 10%, make it 8%. But excuse me, my analysis tells me that inflation is going to be 12%. So there were this is just a small anecdote that I'm talking about. So a certain degree of independence is a necessity, I feel, if I'm genuinely wanting to advise my current or potential client as to, look here, be prepared, their prices are going to rise. So if you have to plan for cost structures, you please pay attention to how the prices are going to behave over the next 3 months, 6 months, 1 year. And that helps him in more realistic planning. Not a kind of aspirational planning. Prices will not rise. Nothing of that sort. Economics becomes very important for all segments of
So is it more of economics research-led forecasting?
Yes.
That you
absolutely
do? Okay.
And the second element why I thought that being an entrepreneur was a good place to be in was accessibility. When I'm an institutional economist, my job was to go for the client meetings as and when, not at a very higher frequency, push my research reports in the inbox of all the clients, and be happy that I've done my job at the end of the day. But here, I thought I need to send a special message. What was that? One was that it's not just independent research. Two, it is also that we are accessible to you. Whenever you need to understand the complexities, because life has become so volatile and uncertain, the economic environment, the client may need to reach out to us whenever. We thought we were the ones who had to make ourselves available, accessible at any given point in time. At the end of the day, our purpose was to handhold the client. So that was one thing that drove me to get on to this role. And the third and the most important one, because we are all in business, okay? Now, we all know that there are, you've had KPOs, okay? I wouldn't call ourselves as a typical KPO, but typically knowledge is something that increasingly, when you are very cost conscious as an enterprise, you want to outsource something that you can do better with through outsourcing and use that particular service through an outsourced model. So economics, in my opinion, falls in that bracket. Why does it so? Because hiring an economist alongside buying and purchasing data is not exactly inexpensive. You at least have to shell out or keep a budget of 40 to 50 lakhs. Because even if you are not going to hire a novice, right? You're going to hire at least a 3 or 4 year work ex kind of an economist. His or her salary, alongside the data costs, which are pretty prohibitive, I must say, would at least cost the corporate or the company a good 40 to 50 lakhs, right?
So can you tell us about who are these companies? Like, what is the kind of companies that actually...
Ideal profile that'll benefit from
absolutely
these insights,
So here a lot of smartness is needed on the entrepreneur's side in creating different structure of product that you are going to offer. There would be one structure which is for SMEs, small and medium enterprises, who perhaps are not as economics literate as larger corporates are in terms of using or utilizing what research we provide them. For instance, for small and medium enterprises, demystifying, de-jargonizing, and keeping the report very simple as to what is in it for you. When I tell you that this is what is happening in Indian economy, this is what is happening in the global economy.
I'm actually thinking from the perspective of a like for example, there are about 40 odd fintechs that Beta Plus is invested in. And each of them are in like different stages of their own growth.
Correct.
I have never actually had an interaction with any of the founders that they should actually consider speaking to an economist until now.
Absolutely.
But why? What should I tell them? Like, why should they actually kind of hear an economist's view?
So here, as one famous economist, JBC, said, supply creates its own demand. They need to know what we are supplying so that they appreciate that, oh, this is also available for us to make use of and utilize it and arrive at better decision making. So different kinds of enterprises in, say, SME segment. If you say a startup, like a fintech, okay? Now, a startup would want to assess the market size because a startup is not going to remain a startup, right? The startup will eventually grow and would have aspiration of becoming a unicorn, right? So you want to handhold that startup, if it is a fintech, keeping them alongside what the vision, the strategy should be as you grow over the next 5 years, 10 years, 15 years. What is going to be the market size? How the Indian population, for instance, if you're working in Indian setup, how Indian population is going to grow, what segments of Indian population are going to be, expanding, where the adoption of technology is going to be the most prevalent, and how you can assess that market size, productize, design your product accordingly. For example, about a decade ago, I would not have thought that tech related to climate or insurance or wealth would have been so close to our doorstep. But within this decade, the country has made such rapid strides that you're using all of the new sectors and trying to get them to adopt the financial model, okay, to become more productive, to become more efficient. And that's where we would help a fintech startup
So they
to
can
assess.
assess the market,
Yeah.
assess the TAM,
Assess the
especially
market.
when they are raising capital.
Absolutely. If I'm raising capital, what is the market environment?
Yeah.
I would like to tell that startup that, hello, the dollar is going to be, stronger or weaker over the next 5 to 10 years, depending on, and mind you, given the post-COVID scenario,
Yeah.
what we have come to learn with is define what is long-term and what is medium-term. Earlier, long-term would be a good 3 years. Today, long-term is 1 year, because that's the kind of volatility and rapid shifts that you see in marketplace. So you need to tell them and you need to take them through your assumptions. And an economist has to make certain basic assumptions to take some macro calls. So you have to take that client alongside you and tell them that these are the assumptions I've made. Basis these assumptions, your dollar to rupee or rupee to dollar exchange rate is likely to be 82 to a dollar or 84 to a dollar, and the time frame when it is going to reach that level. So a startup who's exposed to exchange rates, be it on import side, export side, or whatever, typically I would be an exporter in financial services. I would like to, hedge when I feel that rupee is at its weakest, obviously.
Yeah. No, even in fact, I was thinking one is on the forex market side of things, but even to assess, help, because one of the biggest conversations that growth stage startups have with their potential venture capital investors is defining their TAM, and many a times actually an independent view. It's like investor has a view and startups founders have a view.
But do you do that?
No, we have created a market for her.
So we would help them assess the market size. For
Yeah,
instance. I'll tell you another point that since you spoke of this.
It's not questioning your credibility.
No.
Why should, let's say, a venture capitalist believe in the total addressable market that Dr. Shubhada Rao is defining? Versus
Or any
a startup
economist.
founder,
Or any economist,
Yeah.
So see, economists inherently refrain from irrational exuberance, It's more of a reality check when you have a conversation with an economist. I'll give you a simple hypothetical example. Okay, venture capital wants to put the money in a very new business of, say, defense or space.
Sure.
Okay. It has to make certain assumptions of how rapidly the economy is going to show its growth path.
Yeah.
Okay.
In the country as such, and in the
country and in the world,
and in the defense sector.
Yeah, and the defense. At the end of the day, no business operates in vacuum. You have to make sure what is the operating economic environment for the country that you're working in, right? Now, I would, as an economist, look out for certain numbers. If the person who's making the business model for, say, next 5 years and assumes that in this highly uncertain, volatile world, the assumption being made for India's growth between now and next 5 years is every year India will grow at 10%. I will say, hey, hold your horses. That's not a realistic growth assumption. That's an aspirational growth assumption, keeping in mind today's realities.
Yeah.
Right? So I would, as an economist, it would be my role, my job, my duty to bring some realism in those estimates, in projections, in business projections. Simple thing, I would not want to name the entity, but when all these infrastructure toll companies, for instance, when they were making their revenue projections, they were assuming that without a drop in the cycle, in the economic cycle, year after year, the economy is going to show a 10 to 12% growth. You need not be an economist to know that there's something natural called economic cycles. Unless you have something like a China model, where a lot of it is pump prime dividend. What is that in economics? Is government does all the funding. Pump priming.
Okay.
Pump priming, an economics term, where government takes the sponsorship of putting and injecting all the funds. Okay. Now, Chinese model is altogether different. But if I'm working in a economic environment like a free market and so on, would I be assuming, because I'm not a closed economy, of course China is also not a closed economy, but as an Indian economy, I then have to look at the realistic picture of can my economy grow every year for next 15 years by 10% each year? No. There will be few years where I'll grow at 10, but there would be few years where I'll grow at 6. So it is an economist's role to make a more realistic projection of what the growth should be, and basis that then, from top down, the revenue projections and everything can come back.
And typically, when do customers come to you? Is it after they have made their assumptions, model, etc., and then say validate it?
Yeah.
Or is it more that help us build because they may not even have considered all the variables that is required?
So our own experiences help us build.
Help us build.
Yes.
Okay.
Because perhaps the past accidents have made them more wise, and they know that before we even pump ourselves up for major accidents going forward, let's go the cautious way and at least get the models validated. So I think India has also learned its lessons from the past accidents, that you need a certain validation in terms of a realism as to how real is the projection for revenues, for costs. No, it need not be just revenues. It also needs to be on costs. If I have to look at, interest costs, if I have to look at exchange rate costs, or if I have to look at material costs, input costs, all these things matter. So that's where I believe economists' role comes into play. Looking at the larger corporates, obviously, they would need, where I believe in my past experience has come to larger relevance, is when they build their business strategies. Everyone has a vision to grow. So how do I see as a large corporate entity over the next 2 decades? Everyone, including Indian economy's aspiration, is to be the third largest economy by 2047. That is another 20 odd years, 25 years. You need the vision because you need to put in place all the building blocks along the path to reach that and attain that level. So when the large corporates access us, they would access us primarily on the need of building strategy as to how do you see how do you see over the next 20 years? But here I have to bring in some lighter moments because given the kind of volatility and uncertainty, it's just sticking your neck out as to making projections for next 2 to 3 decades. And why is it so? I'll tell you by example that we actually did. Now, we were doing an exercise when I was a corporate economist, an exercise of forecasting exchange rates and India's forex reserves for 3 decades. Okay, this was in early 2000 that we were asked by a multinational company. So we were obviously trying to put all the building blocks for those projections. And I happened to have a casual conversation with the deputy governor of RBI. So he asked me, what are you doing, Shubhada, nowadays? What is the exercise? I said, oh, don't worry. I'm out to project the exchange rate and forex reserves, So he just couldn't control his laughter. He said, how are you trying to project something that RBI has a hand in managing and maneuvering? So the short point I'm trying to make is you have to keep it simple. You can't make esoteric assumptions. You have to keep it realistic and basically spell out and define your assumptions very well.
Correct.
And that's the acid test.
I think define and in the startups case, educate the assumptions as well. Because
Absolutely.
many a times, I mean, not just startups. I think I'm just using startups
across board. I think it's a duty of an economist to handhold the client in taking them through not just what the conclusions are, but the assumptions that have gone into those conclusions. Because that's where the economic literacy all comes about. If you're my client and I tell you that, hey, next 3 years you're going to grow, do a CAGR of 30-40, okay? But on what basis am I, putting those numbers out for you is very important. So that I have to share with you transparently that these are the assumptions I've made. So along the path, you are a good judge of, the assumptions yourself. You will say, oh, these guys have made ABCD assumptions, but this B and C are not working out as per their path. So I need some corrective steps to be taken. I go back to my economist and tell them these assumptions. And we ourselves, conscientious economists that we are, we have to tell the clients that, hello, we flag off the risks, for instance. When we see that there's a material change to our call, which is around the corner, through our research, we flag off the risks. And when the actual risk looks more material than before, we actually officially then change the call. So in the long run, survival is only when we don't change our clients in and what we deliver. And that becomes very important.
Great. I just feel that sometimes what companies, and I've seen a lot of professionals, so we sort of help a lot of leaders in the corporate world drafting their stories, their vision, mission, as well as how do they build stories backed by data that has a compelling impact.
Right.
And one of the things we see is that they don't question the data enough that is freely available, that like you spoke about. So in essence, are you also making them question some of these data in a more educated, holistic fashion? And why is that important?
Data is very important because at the end of the day, you need something tangible to work with in terms of analyzing an evolving scenario. And I'll tell you, COVID times also taught us that, there were very dramatic shifts in the pattern and behavior of consumer, behavior of an individual. Everyone wanted to live in the moment, make life most for today. Who knows what's going to happen tomorrow? So everyone was spending a lot on something that otherwise, on a trend basis, they were not pre-COVID. So the questions that we asked ourselves of was, is this behavior which is only COVID duration, or will this sustain? Like working from home was a classic example. World over, everyone talks of it. Is the commercial real estate going to be superfluous? The price points of commercial real estate are going to correct because this is a change that's here to stay with us. The jury's still out, for instance, because different geographies have thrown in different behavioral patterns. In economies or countries like India, for instance, getting back to workplace is now more or less being taken as back a sign of normalcy returning. Many of the multinational corporates are still grappling with that. How to get the people back to work. And when you force it, you are ending up with a scenario that people quit their jobs. Now, this is a shift in the pattern that you have to assess. Your data points tell you how much of workforce has dropped off the labor participation, how much of it is back in India. Data points tell you, they actually validate what your hypothesis would be. So data becomes very important. In economics, you have something like a traditional data points. And thanks to technology, thanks to fintech, thanks to the widespread adoption, the economists have new means of analytical tools available to them. What do I mean by that? Something like, UPI payments. If I'm allowed the access to UPI payments, oh my God, you would know the pulse of the nation, the geography, the time, the demographic behavior. You will know everything, how each individual is trying to spend on what, when, how, which segments of population.
So where you source this data from somewhere?
So these are at steep expenses. It's not freely available, obviously, and that's why it was more of an aspirational, kind of exclamation that, oh, I wish I had that data at fingertips. Or for that matter, the GST collections. That will tell you where the growth is coming from. Sometimes you're underestimating, sometimes you're overestimating. But GST is a real data. Your e-way bills, for instance.
Yeah, but you're right. All of these data points are available, I think, clearly.
They're available.
But it is available clearly at a At a cost.
At a cost.
Yeah.
Now, how accessible how affordable are those costs?
Yeah.
That is a question that one can continue to ask. But to the specific response of data being the important part, it's tangible. So what we as economists do is now, we cannot just live in the old world. Oh, we believe only in the government and official data releases. In COVID times, we brought out something like a DART, for instance, at QuantEco. Daily activity recovery tracking. But DART is also, economists are accused of throwing darts, when they say, 8% growth. Oh, you're throwing a dart, something of that sort. So DART was daily activity and recovery tracking was essentially important because how soon the normalcy is returning to life and therefore to economic behavior. Are people going back to restaurants? Are people going back to cinemas? Are people spending? So we were able to track the new age data, the Google mobility, the transaction data, UPI data, payments data. We were able to incorporate all of it, and at a high frequency. Many a times, economics data is available 3 months ago, kind of a thing. What are you going to do with that? So we needed high frequency data. So, or air quality index. Around COVID times, that was the traceable data where whether industries have come back to activity or not. So if there was a deterioration in AQI, you knew that, factories are back in action. So that
proxies
was something.
for
Absolutely. So we were able to combine new age data with the traditional data to be able to decipher, understand, share our analytics with the clients and readers.
So shifting gears now then, how will India become the $10 trillion economy that we all aspire India to be? Can you actually kind of first explain GDP and how it is constructed?
Oh, yes.
And then kind of tell us where we are and
I didn't know we have a 10-hour podcast here.
No, we are dejargonizing it, so...
All right. Okay. So very quickly, rapid fire.
And we are
I would
happy
like
to
to put a rapid fire
take
to
your
this.
time.
GDP and the gross value added are the two elements of measuring economic activity.
Yeah.
What do you mean by that? Because that adds national income, right? Now, on the supply side, you have agriculture, industry, services. Agriculture, no-brainer. Industry would have manufacturing, mining, utilities.
Okay.
Services would have government services, finance, trade, real estate, insurance, hotels, transport, communication. These are all services, right? So there is a method of measurement of all these activities. And that then tells you that whether an economy has grown or degrown. That is contracted. Okay. So you need to know. Every economy needs to know how they are doing, right? So GDP is a way of looking at one side of GDP, expenditure side. So that what I explained was agriculture, industry, services. Okay. Uses and sources of funds you're familiar with?
Yes.
So something of that. Okay, this is source. Uses of funds would be consumption, investment, and exports. Okay, these are this is the other way of measuring it, where consumption is what you and I consume of goods and services. As private individuals, there's a government also which consumes, right? Yeah. So the private consumption and government consumption. Private consumption would be retail and corporate, retail predominantly. Investment would be capital formation. You need to build plant, machinery, capital formation, capex, as in normal jargon, it is known as. You're building capacities. You're augmenting capacities, be it in real manufacturing sector, be it in services, and so on and so forth. Those can be augmented either through productivity gains, by adoption of technology and so on, or also augmented by actually enlarging and enhancing the size of the production size of that facility. That is your investment, which is also done by private sector, like a private corporate sector, and the government, which typically takes over the sponsorship of capital expenditure on broader countries' hard infrastructure and soft infrastructure, building roads, ports, airports, you name it. it's always a government plus private, and there are some times where government has to take over, like post-COVID times. Appetite from private sector would have been low because of the uncertainty and so on. So government had to lead the capex cycle, for instance, because that brings in the private sector into the fold of kicking off the private capex cycle.
Yeah.
If government awards contracts of roads, cement in private sector will go up. Steel.
And the third is exports, you said.
Sorry, and the third is exports.
Got it.
Exports is, we are a net importing economy as a nation, as an economy. We are a net importing. We import much more than we export, but that doesn't take away the contribution of exports.
And so the import thing
On
gets...
the merchandise side, we are net importers. On services side,
when-
we are net exporters.
Got it. And
So
so
this
whatever
is-
we import gets under the consumption bucket.
So imports could be for consumption, could be for capex
Okay,
also.
investments as well.
Right?
Yeah.
So we do a lot of capex imports, capital goods imports as we call
Sure.
them, say from China or for other developed nations on high engineering goods, high tech goods, and so on.
And so when we say India is a $3.5 trillion
economy.
dollar economy,
Uh-huh.
it's what
It
we
is measuring the entire economy. So if
In a year.
So if I'm allowed to use one equation,
Yeah.
Shubhanga, C plus I plus G, X minus M. C is consumption, C plus I, which is investment, plus G, which is government expenditure. X minus M is X is exports, M is imports. So X minus
got
M
it.
is your net exports,
got it.
which typically for India is on the negative side.
Yeah.
Because our merchandise deficit is so large that even if we are net exporters of services, on the overall picture, we are still in deficit.
Yeah.
Current account deficit, as we like to call it.
Yeah.
Okay. So broadly, that is what your measurement is all about of economic activity. To your question of our aspiration of growing from a $3.7 trillion economy, maybe by 28 in next 5 years, we will come close to about $5.8 trillion economy.
Okay.
So our aspiration is to grow from, say, fifth largest to eventually a third
Yeah.
largest.
So help us understand, where is this growth going to come from?
Correct. Now, that is essentially, we need to work on multiple channels
Yeah.
to invigorate growth. One, of course, is enhance productivity. And I would like to dwell on that because when we're talking of fintech, is the biggest tool of enhancing productivity. You're bringing down costs, you're cutting down the cycles,
The time it takes to process
time it
anything,
takes
yeah.
to, and that what enhances your productivity, correct? That is one channel, is enhancing your productivity. Second is putting more to goods and services to, into production mode, basically enhancing your avenues to grow and more to grow. If I'm growing...
No, sorry, I'm not following.
Yeah, I need to give an example. If I'm producing 100 cars today, I should not be happy with just 100 cars, right? I should have a target that as a nation, I want to grow my car production to 1,000 cars. Okay?
In the next
So I build capacity.
Mm-hmm.
That's how my income generation happens. And why capacity capex is always virtuous is because it brings into fold employment opportunities. You will need more people to work on the machines. You create and generate employment. Why do you need to generate employment? Because you need to generate income.
Yeah.
Right? The more the income generating capacity, the more the people earn, the more spending capacity. The more you spend, the more
So
the
it's a
trigger
cycle.
for, it's a virtuous cycle, correct?
Yeah.
So that's how the idea is to enhance capacities. Okay. Now, looking at India and its composition, we have 1.45 trillion people. 1.45
Yeah.
billion.
Yeah.
Okay. I'm still talking of $1 trillion economy to 1.45 billion. Okay, people.
Yeah.
How am I going to put them to good use in India?
Mm-hmm.
We have the issue and topic to discuss on employment. Now, typically in India, we run on two tracks. One is a developed track, one is less and underdeveloped track. What do I mean by that? Cities, urban, semi-urban, fairly developed. If I look at the rural economy, even till date, we always talk of population, India's population, to the tune of 55% at least working in the rural economy. A large part of it works on the farm economy, right? Do I need those many people on farms? No, I don't. Because in economics, we also learn something called disguised unemployment. What does that mean? I have a plot of land. I have a family of 12 working on that one plot of land. Ostensibly, they all look employed. 12 people are employed to create a certain 100 quintals or whatever grain. Okay. I can produce 100 quintals even if 5 people work on that plot of land. Okay, same farmland. 7 people can be put to more productive use than just appearing employed. The productivity is low because 12 are employing for the same output. Here 5 can produce the same output. You get that point. So idea is to generate alternate sources of employment. Basically, you need to get jobs to the rural economy so that more people genuinely earn their incomes. Okay? And how do you do that? By skills.
So essentially, so in that plot wala example that you gave, 2 things need to happen, right?
Yeah.
So one is we need to provide them the ability to generate 100 quintals with 5 people as the example that you said. And the second is, what do you do with the rest of the 7 people?
Create jobs.
So, and both needs to go hand in hand in a sense.
Both needs to happen together because obviously you need farm output, you need agri output to feed the population and to export to the world. But more importantly, you also need to create gainful employment. What we like to call is people who can actually add value to nation's income.
Sure.
Right? So you need to create jobs. And you can't just create jobs in vacuum. You need to skill the people, right? I mean, today, I'm sure you must be hearing so many entrepreneurs talking of, I'm in need of a labor force to augment my capacities, but I'm not getting
any good resource. Yeah.
Exactly.
Yeah.
This is a classic, I would say, an oxymoron situation for India, where you have such a size of population. You need to train them, you need to skill them, you need to reskill them, because at the end of the day, we are moving up the technology curve. You need financial literacy, you need tech literacy, you need economic literacy, you need to have the population which is employable, not just population. So you need to have demographic dividend, as everyone likes to talk about it, not demographic burden. And what we currently have is, to a fair extent, demographic burden, unless we cannot give away the advantage of the young working age population, which is going to be the biggest advantage for India for the next 2.5 decades.
And how are we
go ahead.
skilling it? Skilling them is a key
Skilling
question.
them, it has to be, typically we like to push this to the government's efforts. But to my opinion, and I've been talking about this at various industry associations, that you need the workforce, it's your job, and the onus is on you to skill them. So a lot of industry associations can take up the role.
No, in fact, there are
In a much
startups
more broader
which
way.
are
Yes.
actually taking up. So one of the companies that we had the good fortune of investing, Virohan,
Yeah.
which is actually just focused on upskilling people in tier 2, tier 3 cities in the health sector
Absolutely.
space. Because what we understood from them was, the people who actually kind of come and take our blood samples and everything.
Yeah.
Now, they're actually not nurses or any, or trained medical professionals, but
It's a learnable skill.
it's a learnable skill, and they've
Learnable
actually
skill.
kind of spent time to train
Absolutely.
people in such a way that some of these are actually kind of available.
Absolutely.
So it's upskilling on one side
yes.
and improving productivity on the other.
Totally.
So I think for me, the biggest learning is in every sector,
Yeah.
You can do that.
you kind of look at how do I increase productivity on one side and how can we upskill.
Absolutely. And that is why I said it's a beautiful blend that India has of population that is available to join the labor force in a more productive manner. And how do I help them become more productive is all these smart tools of helping them.
Fabulous.
So, can you distill a little more info on, you mentioned something called demographic burden versus demographic dividend. So, And you feel we are at a demographic burden
Currently,
to a
yes.
larger extent.
Currently, yes.
So what are the
because
factors contributing to that burden?
Contributing, well, I think perhaps the not adequate job opportunities available, and also somewhere the labor force slipping off the learning curve. As an economy, we are very rapidly on
Evolving.
the evolution path.
Right.
And somewhere the skill gaps have widened. So to me, that then appears like a burden. I mean, in our day to day lives, hospitality is one classic example, Particularly post COVID, you see a tremendous gap in the hospitality sector of trained, skilled personnel. Okay, and it's a very easily learnable skill, but you need the avenues to skill them. You need platforms, and today you can reach to the remotest areas through, e-learning, e-training, e-learning, and that is something that India needs to quickly seize on this opportunity to, I wouldn't call a burden in a real sense of burden, but it can become a burden if we don't pay our attention to it very quickly. And one other point that I always have been maintaining over the last 2 decades, 1 decade particularly, is nobody looks at, not everything can be mechanized or automated, right? You will need people. India is in a position perhaps at some point in time that India is going to be the only economy to be able to export its labor. Because
Aren't we already doing it?
No, that is into services.
Okay.
I'm talking of all the segments of the economy. Why is it so? You look at the demographic pattern of all the other countries. The working age population is going to diminish very rapidly. Okay? And people have, post-COVID, also dropped off willingly from the labor force participation, notwithstanding the post-COVID behavior. Even prior to that, the way the global demography is behaving is that a large part of it will be a dependent population. That means post-retirement. Okay? So India will be one economy which will remain young, working age population for the longest period, even much higher than China. And that to me becomes an advantage that India needs to focus on skills, reskills, upskill, new skills, you name it. In all the strata of skilling, India needs to up its game very quickly. It has been doing it, but it needs to do it very rapidly and quickly, because that window, that opportunity is at this point with us.
Interesting.
I think as a common man or a lay person who has very limited knowledge of economics, what should they know so that they can take some good decisions in their day-to-day life?
I think what should they know about macroeconomics?
Yeah.
I think a lot of us intuitively understand
basic
Right.
economics,
Right.
like a transaction and all of that.
Right.
Yeah.
But I think
Supply, demand,
his question is
That's more of finance and less of economics. Okay, so a very quick 1-minute rudimentary lesson in economics. What is economics? At the end of the day, what parameters, what variables become important for you and me? Okay, I need to know inflation.
Yeah.
Okay, because it affects my business, my work, my day-to-day living.
My savings.
Even as an individual, my savings, in real terms, savings in real terms are depleting if inflation is rising. Interest rates, because if I'm in business, if I'm in leveraging, I need to know what is likely to be the interest rates. I need to know what my exchange rate is going to be. I need to know where the growth is coming from in the economy. That would depend on the government policies, the government reforms, the private sector reforms, the financial sector reforms, the central bank reforms, the Reserve Bank of India reforms. I need to understand the landscape of reforms in the economy, which is going to push my growth path.
Yeah.
Because at the end of the day, you want to participate in that growth trajectory, right? In that growth ascent.
Yeah.
That is growth. I also need to understand, so I've done inflation, I've done exchange rates, I've done growth, interest rates. So predominantly, these are the building blocks of understanding economics. And economics helps you go to the bottom of what is governed by
What factors?
what variables, parameters, so that you, by just reading a few data points, reading some pieces on economics, particularly of QuantEco. I'm trying to sell our business here. But it helps you decipher and plan better your life as an individual. My support staff talks to me as to, what are the SIPs? She is not trained literate financially or economics, but she has these words on her ears all the time. So she asks me, what was global financial crisis, for instance? So I have to explain it in a very simple manner, what it meant, what it unfolded into. Economics, financial literacy is very critical as an individual. Forget businesses. I think that helps you make more informed decisions. And that's why economics becomes, I would say, a center point for everyone to be familiar with.
What is one macro trend that you observed that's changed post-COVID?
I would think that people, at a retail level, at an individual level, people have begun to consume more while they are definitely saving, but their consumption saving pattern is undergoing a change. This is more of a post-COVID phenomenon. But
So are they consuming more or?
They're consuming more. Okay. Now you look at real estate, for instance. People in cities like Mumbai, for instance, have begun to opt for slightly bigger houses. And this is a post-COVID phenomenon. Earlier, they were okay with, in cities like Mumbai, you typically have a smaller apartment. But even in Mumbai, the size of the apartment, the demand for a bigger apartment has gone up. Now, this is also a function of forced savings, which happened during COVID times. You didn't have too many avenues of spending. So it was a forced saving. What happens after the forced savings get depleted? So that is something, it is still work in progress, to be very honest. I wouldn't even want to claim that I've understood this whole thing well and feel fully confident that, okay, take my word for it. And, this is the final line carved on stone.
I think there's so much to learn and know about these trends and how holistically we can make decisions. And it feels like a never-ending
it is.
Ocean.
I just realized that 3 of the other channels of growth I've not even spoken about. Aspirational India. Urbanization is one such growth engine.
Correct.
You urbanize semi-urban areas or rural areas, take jobs, modernize the infrastructure, soft, hard infrastructure. That's a growth engine for you. Basically, there are some 3 critical building blocks which are very important for India's aspirational growth. New capital formation. Space has become a very happening area now. Sector. Defense is green or climate. Okay. Fintech, wealth tech, insurtech, you name it. The whole thing is now working on a different platform and into a new orbit. Great. So to me, that becomes the biggest, I would say, propeller for growth for India in the coming 2 decades.
I think one last question, Shubhada, before we kind of close, right? So you did give a mathematical equation, C plus I plus G X
plus
M.
X minus M in brackets.
So the thing is, what I'm kind of still trying to understand is, today there is a mix of each of these 5 variables at $3.7 trillion.
Yeah.
At $10 trillion.
Yeah.
What needs to change massively among these?
All 3.
I appreciate.
Yeah.
What does your forecasting, projections,
Our
etc.
projections, well, as I said, we don't forecast beyond 5 years.
Sure.
But if somebody holds a gun at my head and tells me to make the 20-year projection.
No, I mean, forget.
Or just crystal ball gazing with decent rational economic assumptions, if I'm allowed to do so. What will propel India's economy is the consumer class has to grow.
Okay.
Inequalities have to reduce. Today, we are, as you may have heard, India grows at a K-shape. K-shape is one part of economy is growing very steeply.
Okay.
The HNI, the UHNI, the well-run, very high-end corporates, the conglomerates.
Okay.
but there's equally important part of the economy which is not growing as rapidly.
Got it.
Okay, so I don't know in technical parlance, what is it called? The upper stick of K and the lower stick of K. There is a certain name. But what we are having is at a multi-speed recovery, and that brings in the yawning gap in inequality. Inequality is never good for any economy. And this is not just a phenomenon that in India that we are going through. World
Globally,
over, post-COVID, inequalities have grown. So that is something we need to address. So if we are able to,
Arrest
put
that.
money in the hands of people, it's closing the loop of the argument. Employable population has to
Yeah.
significantly rise. Consumption will automatically increase, which will automatically trigger your production cycles.
Correct.
Hopefully by then, the world would not have deglobalized, but would come back to acknowledging the advantages of a globalized world. So that would help India get back. If you may have noticed, I deliberately kept the China +1 kind of a argument aside because it has been well talked and over discussed in my opinion. But keeping aside the China +1, India has a glorious potential of combining the traditional sectors with the new age sectors, and the investments can grow in both. So idea is to how am I taking that 3.7 trillion economy to a 5.8 trillion economy
To a 10 trillion.
to a 10 trillion economy would be essentially that I need to propel all my drivers of growth. What do I mean by that? I need to grow my consumption, has to be a bigger propeller. Investment will be the primary propeller. Why do you say primarily? Because that is going to generate
Generate the
jobs.
consumption and
So
ultimately.
you cannot be a net importing economy as far as capex is concerned. You can't be, right? So you need to create domestic capacities. You need to generate employment. You need to have different sectors to grow. Cyclicality is there in different sectors. Some sectors will grow today. They may go through a downtrend,
Sure,
for
yeah.
some time. You need to have a broad base. And I think an interesting observation would be if you look at different capital market indices, stock exchanges,
Yeah.
and if you look at the top 50, India perhaps would be the most diversified in sectors,
Got it.
right? So that tells you that India has a potential in growing various sectors with leadership in some corporates and others following suit. So India has this opportunity, and India should just go and grab it with both hands.
No better note to end a conversation for today, at least. And we're all kind of obviously India bullish, right? So
Yes.
thank you so much for, I think,
Pleasure's all mine.
very deep insights. At least from my perspective, I learned a lot on basics, right? And
I hope I did not end up confusing you then.
no, I think it's first to get confused, we first need to have some basis, right? So I think our basis got created today.
Okay.
And I'm sure we can have like 3, 4, 5 such conversations.
Because
coming
economists are
forward.
notorious for confusing and confounding more than explaining.
I don't think that was the case today. So thank you so much for all the
Pleasure.
insights.
It's all mine.
It was great
Thank you.
conversing with you.